Duane Duggan, RE/MAX of Boulder video podcast. Today we have Jessica Shanahan from Premier Lending here at RE/MAX of Boulder. Thank you for being here today.
Of course, thanks for having me.
So one of the hot questions that Jessica asks right now is whether or not to lock the interest rate. That is the question. Anyway, with rising rates, that's a real common question, right? People are concerned about what the rate's going to do before they close on it. So let's talk about locks and what the heck is a lock in the financial world.
Sure. So what a lock does is it locks your interest rate with the investor, and it's locked to that particular day's pricing. So if something fluctuates tomorrow or if rates were better the day before, doesn't matter, you locked on that day.
Okay. And what do you have to have for a lock? Do you have to have a contract, or can I just call up and say, lock me? What do you need to do?
You need to have a contract because it is attached to the property.
Okay.
So it's like if you went under contract and then fell out of contract because of your inspection or something like that, we would relock you based on the new contract.
Gotcha. And how long do locks last?
So that's a great question.
That's what I thought of.
So usually you see when you're getting quotes and estimates from your lender, they're using a 30-day contract or a 30-day lock.
Okay.
So that's typically what you see, but they vary. So they can go 30. Well, we can do something as short as 15. We can do 30-day, 60-day, 90-day, and then long-term locks, which is what we're going to talk more about.
Okay, and pricing of those locks, how does that done? I assume that if it's the shorter lock, it's a better interest rate than the longer-term lock. That seems to make sense, right?
Right.
Okay.
Yeah. So it is a better interest rate. That's exactly right. Sometimes it's the same interest rate. That goes all into pricing and more information than you probably would like to know in this video podcast. But basically, yes, it's a better interest rate. So if you're locking for 15 days versus 90 days, you're probably going to get a better interest rate on that shorter term lock.
Okay, and do you charge the borrower for these locks?
For anything, we have up to a 75-day lock that isn't going to be an upfront charge to the borrower. Anything longer than that is considered to be a long-term lock. And so it's going to vary on the investor, but what you'll probably see is going to be a portion paid up front, like a point paid up front to the lender. So you just mail me a check and that's what locks in your interest rate. Then that can be refundable, that can go towards the loan, or it might just be an upfront fee that you pay and you never see it again.
Okay, and what about when a buyer is getting a new home and it's 180 days out? Can they lock for 180 days?
They can.
It just gets expensive? Or?
Yep, it just gets pricey. So that's kind of when we have the conversation with the client. You can do this long-term lock if you really feel strongly you want this interest rate and you want to just stop worrying about it. Right. Then you could pay that upfront fee, get your interest rate locked in, and then usually with those long-term locks, there's like a float down period. So within, let's say, 30 days before closing, you would have the option if rates had improved to float down to the current market rate. So that's a nice option, and it kind of takes some of the worry out of, oh, well, what if market changes and I could have gotten a better interest rate? Or sometimes since you're already paying that point up front, some clients will just wait it out until that 30 days before closing mark, and then they'll just buy the interest rate down.
Right, so you can kind of help them decide if the trends are worth putting money into
exactly.
a lock or not. Okay.
Exactly.
All right, any other thoughts on whether to lock or not?
I would just say talk to your lender.
Okay.
And I always tell clients, as soon as you're comfortable with the payment, lock it. Because in this market, it's so hard to say what's going to happen tomorrow or in a week from now.
And that's well said. Over my 40 years of doing this, it seems like interest rates have always gone up fast and down slow.
Yeah.
So in general, if you think the trend is up, it's probably a good idea to lock if you're happy with the rate like you just said.
Yeah.
So, Jessica, thanks for being here today.
Thanks, Duane.
Appreciate that.
Yeah, so you can reach me at 720-833-7964. Our website is www.premierlens.com.
Hopefully that answers the question, to lock or not to lock. Duane Duggan, RE/MAX of Boulder video podcast, signing off.